Welcome back. Nigeria and Libya have been asked to keep their current oil output levels, and they remain exempted from current cutback agreement among OPEC and non-OPEC producers. An energy meeting of oil producers from the Organization of Petroleum Exporting Countries and non-OPEC frontline producers like Russia takes place today in St. Petersburg, Russia, aimed at discussing the state of the market and compliance with existing arrangements. The meeting disclosed that compliance among members is currently around 95% on the agreed 1.8 million barrels per day on a deal already extended till March 2018. Nigeria and Libya were exempt from the December 2016 cutback, which took effect in January because of their struggles to restore production due to internal problems of damage to oil facilities. Meanwhile, oil prices were little changed in early trade following a steep fall in the previous session amid growing expectations that the joint OPEC and non-OPEC ministerial meeting would address rising production from Nigeria and Libya, two OPEC members exempted from the cuts. London Brent crude for September delivery was unchanged at $48.06 a barrel. NYMEX crude for September delivery was down 2 cents at $45.75. OPEC Secretary General Mohammed Bakindo says a rebalancing of the oil market is progressing more slowly than expected, but it will speed up in the second half of the year. And away from the markets news to other stories, the Economic Community of West African States is studying the implications of admitting Morocco following its request last month to join the organization, and that's according to Nigeria's Foreign Affairs Minister Geoffrey Onyema. Morocco's request was accepted in principle by leaders of the group at a June 4 summit in Liberian capital Monrovia. Several Nigerian lobby groups, including an organization of retired ambassadors, are putting pressure on the Nigerian government to reject the application because of the decades-old dispute over Western Sahara and Morocco's geographical distance. Nigeria recognizes the Western Sahara as an independent nation, while Morocco claims it as part of its territory. And the Organization for Economic Cooperation and Development, OECD, says South Africa needs bold structural reforms to boost the ailing economy as there is limited room for monetary and fiscal stimulus. Africa's most industrialized economy entered recession in March. The country is also struggling with a high unemployment rate, and credit downgrades by two of the top three ratings agencies based on the economic and political turmoil have dented business and consumer confidence in South Africa. OECD in its economic survey says reviving economic growth is crucial to increasing well-being, job creation and inclusivity. The government has developed a 14-point economic strategy to stimulate growth released by Finance Minister on July 13th, but the plan has received a lukewarm reception from investors. In the meantime, the International Monetary Fund has released a new report confirming its previous estimates of 3.5% growth for the global economy in 2017 and 2018. The report says United States growth will be weaker because near-term fiscal policy looks less likely to be expansionary than was expected last April. The U.S. Federal Reserve meets this week to decide on Fed fund rates and is seen as holding the status quo until December. Meantime, China, the world's second largest economy, was given a 0.2% upward revision of growth to 6.4% on expectations of doubling real gross domestic product by year 2020. In the Eurozone, the IMF forecasts UK economy will be lower due to unclear impact of Brexit, while the broader Euro area growth forecast for 2017 was moved to 1.9% from 1.7% previous estimate. And we look at the debt market now, starting with Kenya. An innovative Kenyan board, which is bond, which is bought via mobile phone, has raised far less than the 1 billion shillings targeted failing to match a previous success. In March, the East African nation became the first country to issue a mobile phone-based bond, which can be bought by phone users without the need for them to have a bank account. Now, investors can use mobile phone networks, financial platforms like M-Pesa to send money and receive interest payments on the M-Akiba bonds, which can be traded in the secondary market. Kenya's first such 3-year infrastructure bond raised its target of 150 million shillings within days, and it launched the sale of the second tranche last month. However, the second tranche had raised only 128 million shillings by midday on Friday. And here in Nigeria, the fixed income markets, the markets are all in a wait-and-see mode for the outcome of the MPC meeting, which begins today. Now, let's see what the mood is like at the debt market this first trading day of the week. And I'm being joined by a fixed income dealer with Citibank Group, Seun Ameh. Good afternoon, Seun. Thank you very much for joining us.
Good afternoon.
Now, the MPC meeting begins today. How is that driving sentiment in the market?
Well, I think we're seeing a little bit of cautious trading in the debt market. Bonds have been mostly quiet. Though we'll see some activity, but it's little compared to the daily average we are used to. Treasury bills have also been quiet. The activity we'll find is mostly on the very short end of people trying to adjust past positions by buying short-end treasury bills. So really, it's been cautious, to say.
All right, cautious trading there. Now, from a market player point of view, which direction do you think the MPC will likely take tomorrow?
Well, I would say most participants expect the MPC to keep things flat. Given by the metrics we have of the inflation and the credit and the happenings in the global economy, I think an expansionary policy is not expected at the moment, and further tightening, I don't think the central bank will tighten at this MPC. So mostly the sentiment is that they'll keep things flat, really.
Okay, and so what is your general outlook for the market for the rest of the week?
Well, market will be liquid throughout the week. We have some coupons being paid into the market and more maturities, and we may get fast payments. So really, the liquid market means we tend to have more activities on treasury bills, that's very short end. Bonds, the outlook will depend on the interest you get from investors during the week, really. So if we get much interest from investors, then I think we'll get more activity on the bond space.
All right, thank you very much for your time, Seun Ameh, our fixed income dealer with Citibank. Well, that's a wrap on today's edition of the program. Thank you very much for watching. I'm Chimizi Obi Iwago.